Hey everyone, welcome back to the channel, your number one source for income-oriented investing. And today we're going to talk about what should you do as a PII investor, or really as an investor in general. This is, what I'm about to say is going to really even apply for growth investors as well. But what do you do now that markets are at an all-time high? S&P 500, NASDAQ 100, even the overall Canadian market, the TSX Composite Index. Markets are really high. They have hit all-time highs. So what do you do? What do you do as an investor? Do you keep investing? Do you not invest? Do you wait? So in this video, I'm going to give you 6 things that you can and should do, in my opinion, now that markets are at an all-time high. Let's get to it. All right, everyone. So the first thing you could do now that the markets are at all-time highs should be fairly obvious, is to streamline your portfolio, or take the opportunity to streamline your portfolio, because when you want to streamline your portfolio or get out of a position, it's obviously much better to do it when the position is higher. So I'm talking about anything from single stocks to ETFs, or just really anything that's overlapping in your portfolio, and you want to streamline your portfolio, make it smaller. You've gained experience, you know what you need and what you don't need. So take the opportunity. You could take this opportunity to streamline your portfolio, probably realize some gains, and if not, maybe not as much losses, right? Because when typically the overall markets go up, it raises everything. And this brings me to point number 2, also, which is also connected, or something else you could do. Number 2 is DCA, or dollar cost average, into funds that you want to sell, right? So if there's something you want to sell in your portfolio, the markets are at all-time high, you're struggling to figure out where to put the money, or your monthly contribution, or your monthly investment amount, what you could do is dollar cost average, or invest in the things you want to sell, so you average them down, lower your losses if you have any, and then you could sell them off, right? So I'm kind of doing this right now. I'll give you the example of FTN. And I'm when I say DCA into things you want to sell, I'm not really talking about the crazy penny stocks. I'm talking about funds that have quality stocks, things that maybe there's some overlap in your portfolio, a good fund that has quality stocks, but there's overlap, you want to get rid of it. I'm not really talking about penny stocks here, right? Because I don't want you to just DCA into crappy stocks. I'm talking about more funds to streamline your portfolio, or you want to eliminate the overlap. So dollar cost averaging into things to lower your cost base to sell them later could be a good idea also, now that markets are at all-time highs. Could be a good opportunity. So for me, the example would be FTN. FTN is all financials. It's been going up. I'm still down on it 12%. I do plan on selling it, so I'm probably going to be investing a little bit more to really dollar cost average, so I'll get to that break-even point quicker, right, when financials and FTN hits that target. So hopefully I'm making sense. That's second thing you could do. Third thing you could do is look for undervalued sectors. I don't care if the markets are at all-time high, guys. There's always going to be some sectors that are undervalued. So right now I feel it's gold, utilities, financials, and REITs, especially REITs, long-term bonds, anything that has, or that's sensitive to higher interest rates. Basically, there's always going to be an ugly duckling sector that's nobody's talking about when markets are all-time highs right now. Technology is at an all-time high. You got to look at what's not being talked about. The ugly duckling, that's what you got to look at. And it's things like real estate, utilities, gold that's not doing well, or things that typically don't do well when markets are at all-time highs like gold, or things that are interest rate sensitive like utilities, financials, and especially REITs. Next thing you could do is, some people they don't like to invest in general funds or index funds when the markets are at all-time high, because these funds are probably going to be at all-time highs as well. Is look for funds that are not correlated with the market, right? There are some funds out there that are less correlated with the overall market. SVOL, for example, for a US listing is a perfect thing, right? SVOL kind of, yes, it follows a little bit the market because it shorts the VIX, but it's very stable. It's a stable 15% yield. So look for those funds that are not necessarily at all-time highs, that generally stay very even. Another thing is things like long-term bonds, right? These are boring, but they're a bit disconnected from the overall equity market. Bonds is really the fixed income market. And on top of that, now's a good time to get into long-term bonds, right? Things like HAPT, HPYT from Harvest, or even on the American side, you have plenty. You have things like Trez, or from Defiance. You have AGGH from Simplify. So things that are really not connected that much to the market, you might as well invest in those because they're probably not at all-time highs. And last but not least, this is very important, guys. Probably the most important point is you should keep investing nonetheless. Remember, we are investors. We're not short-term traders. So I don't understand when people say, oh, markets are at all-time high. Markets are at all-time highs. I'm going to wait, or I'm going to park cash to get in later. That's like timing the market. It makes no sense. There's always going to be an all-time high or a new all-time high because over time, the markets tend to go up over time. So this logic that you're going to park cash and wait, park cash into whatever, makes no sense to me. So if you don't want to do any of the other points, I still feel like keep investing into the overall market is still completely fine. You got to think long term. For me, it doesn't make sense to park cash to try to time the market. If you're going to do that, which I'm not suggesting you do, at least put the cash in certain funds, that you will at least get some yield. And you could check out my cash parking video that I did. There's great options where you can make 6% plus yields, even over 8% in really boring funds. And you could consider them, or I consider them, cash parking funds. So that's what I would do now that markets are at all-time highs. Hopefully this video gave you some ideas. Let me know what you think. What are you doing now that markets are at all-time highs? Please don't say you're waiting for the market to crash. We're long-term investors, guys. We shouldn't think like that. That's how short-term traders think. So that's it for this one. See you next time. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member, where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the ultimate DIY investing package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and US stock markets. And the good news is you'll only ever have to buy it once because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and PASSIV referral links below. So Questrade is the broker that I personally use, and PASSIV is the broker companion tool or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And PASSIV, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of PASSIV is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram where you could follow us or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.